Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions in which we cover the relevant and important finance current affairs from the examination perspective. So today I have brought for you the annual report that is for your IRDAI examination. Okay, so annual report 2022-23, this is the most recent of the annual report for the IRDAI examination that is released by the IRDAI. So this was released in December 2023. Okay, so you can understand that this is the most recent report that we have, and this is a must-do report for the IRDAI examination, because if you have seen the syllabus, many of the components like the insurance penetration, the insurance development, that you can understand, that you can know about through this report, and you can write good answers if you have the understanding and the data points from this report. Okay, so this report is specifically and most importantly, this report is for the IRDAI examination, and for your descriptive answer writing, this report is going to be very important from the objective point of view also, that is for the phase 1 from the GA perspective also. We will discuss the important data points of this IRDAI report. Okay, so first of all, congratulations for all of the students that have cleared the RBI Grade B phase 1. Recently the result has been out, so congratulations all of you. And for the phase 1, the IRDAI the filling of the forms have been finished, so soon your phase 1 of the IRDAI is going to happen. So for that you must be preparing for the IRDAI. So this annual report of the IRDAI, today we are going to discuss it from the objective point of view for the phase 1 and for your descriptive point of view for your phase 2. Okay, so we are going to have the complete understanding of this report. But before starting with this report, do subscribe to the YouTube channel of EduTap and join our Telegram channel so you can get the PDF of the PDF of the session in the Telegram channel. So you will get the PDF of today's session in the Telegram channel. Okay, give me a thumbs up if everything is fine, if I am clearly audible and visible. So give me a thumbs up if everything is going fine, if everything is clear. So we are going to start with the appraisal of global insurance market. Okay, so in this report we have to focus on the appraisal of global insurance market. So as per the Swiss Re Sigma report that was released in 2023, the global economy continues to slow down. So the global economy has slowed down and inflation remains a primary global macroeconomic concern that we all know about, that there is the slowdown of the global growth that happened in the 2023 also, and there was the inflation that was remaining persistent. Despite such challenges, the insurance industry is expected to remain resilient in 2023 as the global economy is projected to grow by 2.3% during the year. So here basically the focus that you have to put here is on the forecast that has been given by the Swiss Re Sigma report for the global premiums for life insurance and the global insurance premium. So in the insurance industry, there are the premiums that are collected. There are the premiums that are collected for providing you insurance, for providing you life insurance, for providing you motor insurance, for providing you health insurance, for providing any kind of insurance. There are the premiums that are collected. Okay, so there are the life insurance. Life insurance means that is for your life, the life insurance that is provided to you. Let's say that after the death of a person, to handle the family or to sustain the family, the person has done, the head of the family has done the life insurance, that if I die, my family should be secured. Or life insurance, that is even the pension or the annuity to get after the retirement or after a particular age. If you want to get the annuity or if you want to get the pension, you can do the life insurance, that you are submitting the money, you are paying the premiums for a period of time, and after a period of time you will get the annuity. Okay, so Swiss Re forecast global premium for life insurance to grow by 0.7%. So the global premiums is forecasted to grow by 0.7% in the life insurance segment in real terms in 2023 in comparison to the 10-year trend of 1.3% growth. So here you can see that the percentage is lower than the 10-year mark. So there is the slowdown that you can see even in the insurance sector. Even in the insurance sector, there is the slowdown that has happened, that there is a 10-year trend that you can see that the growth was happening by 1.3% in the growth in the premiums, in the insurance premiums for the life insurance. But now it has been said that for the 2023, the insurance premiums are growing by 0.7% only in the life insurance segment. Whereas if you see for the global insurance premium, for the non-life insurance like your health insurance, motor insurance, fire insurance, so all the other kind of insurance that is there, the general insurance that are there, so these are the non-life insurance. So global insurance premium for non-life insurance is estimated to grow by 1.4% in real terms in 2023. So that is higher than the life insurance premiums. Okay. So in totality, overall, the global insurance premium volumes, the non-life and life cumulatively are projected to grow by 1.1% in 2023 and 1.7% in 2024 in real terms, that is below the 10-year trend of 2.6%. So the insurance market or the insurance industry is slowing down in the global level. You can see in the global economy level, the insurance sector or the insurance industry is slowing down, as you can compare the 10-year trend and the recent forecasts that have been given. Okay. Now the next thing is, as per the report, the United States is the largest insurance market with total premiums close to USD 3 trillion in 2022, and followed by China, followed by United Kingdom, followed by Japan and France. So there are the top 5 insurance markets that are provided at the global level. So the top market is which? The US, that is the United States, is having the largest of the insurance market. After that there is China, after that there is United Kingdom, after that there is Japan and France. Okay, so these are the top 5 of the insurance markets in the global level. So where does India stand? That we have to discuss. So India stands at 10th. So India is the 10th largest insurance market at the global level. So in 2022, India was ranked as 10th largest insurance market in the world with a premium volume of USD 131 billion with 1.9% share in the global insurance premiums. Okay, so out of the total global insurance premiums, 1.9% is the share of India. Now this data points you can use in your answer writing in the development of the insurance sector in the country or the insurance penetration we will discuss about. Okay, and it is projected to become, so India was ranked 10th largest insurance market, and it is projected that India will become 6th largest insurance market by the year 2032, as India's insurance market is one of the fastest growing insurance markets in the world. Okay, now why India's insurance market is such a fast growing insurance market, and how we are going to become from the 10th largest insurance market to 6th largest insurance market. So the growth outlook for India is based on strong economic growth that we are having. Okay, the perseverance, the resilience that India is having against the global scenarios. So the strong economic growth, the resilience, the perseverance that we have, the rising disposable incomes of the people. So the disposable income means this income, this is the disposable income that we can consume or we can save. So this is the total income that is left with the households, that the households can use for their consumption or for their saving purposes. So we have rising disposable income. Okay, a young population, as you know, young population means demographic dividend. So you can use better terminologies in your answer writing. So we have young population, we have demographic dividend, as we have more of the young population. Okay, we have less of the dependents and more of the young population. Increased risk awareness, the people are getting more aware. Financial inclusion, you can use the data point of financial inclusion, that financial inclusion is increasing in our country, that is increasing the awareness among the people about the financial sectors. Okay, digital penetration is there and it has become very easy. In the coming slides we are going to discuss about Bima Sugam, Bima Vistar and various things, Bima Manthan and such. So digital penetration has increased a lot in the insurance sector as well as among the people. So they are getting more aware and they have easy access to insurance now, because they can access the insurance through the digital system. They do not have to go to the agents and to the insurance companies and such. They can do everything. They can access the insurance market through their mobile phone as per the digital penetration. Regulatory developments have happened, regulatory norms have been revised and there is better regulatory development that has happened. Now coming to insurance penetration and density, this is a part of your syllabus in the ESI impacting insurance, as well as from the insurance and management syllabus also. Insurance penetration and density topic is very important, okay? And this is important for your phase 2 descriptive writing as well as phase 1 GA. Now, as per Swiss Re Sigma report, the insurance penetration of life insurance sector in India is reduced. First of all, what is insurance penetration? What is insurance penetration? So, insurance penetration is shown as a percentage. This is a percentage of the total premiums that are collected divided by the total population. Okay, so this is the total premiums that is collected divided by the GDP, divided by the GDP. Okay, so the insurance penetration, it is a percentage of total premiums that is collected upon GDP. So we are seeing the total premiums that are collected as a percentage of GDP. So that is insurance penetration. Now what is insurance density? Insurance density. So insurance density is your premiums, the total premiums divided by the population. So the insurance density, it is a ratio of the premiums to the population. So insurance density is showing the per head insurance premium collection or the average insurance premium collection that has happened. So insurance penetration, basically your insurance penetration, it is a percentage of the total premium that is collected upon GDP. So the insurance penetration is showing that against the GDP, what is the total penetration, total premium collection that has happened. Insurance density, it is a ratio. Insurance density, it is a ratio of the premiums divided by the population. So the insurance density is showing the average insurance that is collected per head. Okay, so that is the idea, that is the average amount. Insurance density is showing the average amount of premium that is collected per head or on the population basis. So this is the difference, that whenever you say or whenever you see insurance density, so you will be able, so insurance density, you will be able to see it in the US dollars or the rupees or such, because this is showing you the premium collected per person. Whenever you say or whenever you see the insurance penetration, you have to see it in the percentage terms, because this is a percentage of total premium collected divided by the GDP. Okay, so we will understand this better when you see the data points, because then you will get the idea. Okay, as per Swiss Re Sigma report, the insurance penetration of life insurance sector in India is reduced from 3.2% in the 2021-22 to 3% in 2022-23. That means the insurance penetration has reduced to 3% in 2022-23. That means now we have, you can understand that the insurance penetration, this is the percentage of the total premium collected against the GDP. So this has become 3%. Insurance penetration of life insurance sector has become 3%. And the same, that is insurance penetration for non-life insurance sector, remained at 1% in both these years of 2021-22, 22-23. So you can understand that the insurance penetration for the life insurance sector has decreased to 3% in the 2022-23, and for the non-life insurance sector, the insurance penetration has remained at 1%. So in totality, overall, as such, India's overall insurance penetration in the life insurance sector and non-life insurance sector has reduced to 4% in 2022-23 from the level of 4.2% in 2021-22. Okay, and the decrease has been seen because of the life insurance sector. The non-life insurance sector has not seen this decrease. Now the life insurance density. So life insurance density or insurance density, when we talk about, so in the life insurance segment, the density has increased to USD70 from USD69. So before, on average in India, we were providing $69 as the insurance premiums, but now the insurance density or the average amount of premium that is collected has increased to USD70 in 2020. So that is the comparison of the 2022-23 from 2021-22, whereas non-life insurance density remained stable. So in 2022-23 overall, if we see, the insurance density in India has increased from USD91 to USD92. So the average amount of the premium that is collected on the per head basis has become USD 92 in 2022-23. So this is the overall idea. Any confusion anyone has in this data points? So first of all, insurance penetration for life insurance sector has become 3.23% from the 3.2%. The non-life insurance sector has the insurance penetration of 1%. So cumulatively, before 2021-22, they had the insurance penetration of 4.2%, but now they have insurance penetration of 4%. Okay, the insurance density in totality has increased from $91 to $92. So this is the basic idea. Okay, now as per Swiss Re Sigma World Insurance Report, the global insurance penetration and density were 2.8%. So for the globally insurance penetration was 2.8% and USD 354 was the density for the life segment and 4%, and USD 499 was the density for non-life segment. So in totality, the insurance penetration and density were 6.8% and USD 853 respectively in 2022. So you can understand that as compared to India, India is having the total insurance penetration of 4%, while the insurance density is only $92. So this is the data points for the 2022-23. If we compare at the global level, the insurance penetration is 6.8%, while the insurance density is 853. Insurance density is 853 USD, while the insurance penetration is 6.8%. So our country is still lagging behind, though we are growing in our insurance segment, but our insurance segment is still lagging behind. Any confusion anyone has here? So the insurance sector is developing, insurance market is developing in our country. The insurance penetration is 4%. The insurance density is for USD 92. Okay, but if we compare it with the global level, we are still lagging behind, because at the global level, the insurance density or the average collection of the premiums, the average amount that is collected for the premiums is $853, while the insurance penetration at the global level is 6.8%. So we are still lagging behind by a lot, but we are catching up. Okay. Now, business performance of life insurance sector, then we will discuss the business performance of non-life insurance sector. Life insurance sector, that is the life insurance that you see that even after the death of a person, the family will be supported. So that's why someone is taking the life insurance, or let's say they want to get the income after a certain, or they want to get certain payments after the period of time. So let's say right now they have done a life insurance for a period, for a 10 years, 20 years period, and after they have completed this period, they will get the maturity amount, or they will get the regular money. So that is life insurance segment that protects your family, or that protects you after a period of time. So life insurance market in India has recorded a consistent premium growth over the years. So during 2022-23, the life insurance industry recorded the premium income of 7.83 lakh crore, registering 12.98% of the growth. So there is growth that is happening in the premium. The premiums are growing. There is growth that is seen in the premiums, even though the insurance penetration, that is the premium divided by the GDP, even though it has decreased slightly from 4.2% to 4%, but still there is, from in the life insurance segment, it was 3.2% to 3%. So insurance penetration has decreased slightly in the life insurance sector, but still the premium growth is happening. Okay, there is premium growth that is happening. The private sector life insurers have clocked a growth of 16.34% in premiums, while the public sector life insurance companies have recorded 10.90% growth in the premiums. Okay, Life Insurance Corporation of India, that is LIC, is the only life insurer underwriting business outside of India and collected a total premium of 404.78 crore during 2022-23. Even if you are not able to remember the numbers, at least remember the percentages. And which entity is the only life insurer underwriting business outside of India? So that is LIC. So underwriting in insurance sector is very different from the underwriting that we hear in the other industries. Okay, underwriting process that is engaged or that is involved in the life insurance is the involvement of an entity. So if the life insurance company, or if the Life Insurance Corporation of India, that is LIC, if it is doing the underwriting business, that means it is assessing the factors such as the applicant's age, the risk factor, the health, lifestyle, occupation, medical history and such. So they are determining the risk that the individual have. Let's say I want to take a life insurance. So if I want to take a life insurance, I am going to a certain entity that I want to take a life insurance, or I want to take a health insurance, or whatever insurance I want to take. Okay, so I am going to an entity. I am going to an entity for the particular insurance. So now the entity will want to see that how much risk do I have. If I pay the premiums, will I die next year, or will like I will be surviving for, like, what is the life expectancy? Because if I survive, they will not have to pay the life insurance and such. Okay, or if there is no health disease, that means they will not have to pay any health premiums or such, or they will not have to pay any claims or such. So my risk will be seen, that what is the age, what is the health history, what is the medical history, what is the occupation. If I am working in a hazardous industry, so that means it is more risky for the person, and the claim might be made. Okay, so the lifestyle, occupation, all of these things are sought out, and then the risk is calculated by the underwriter. So underwriter is the one that calculates the risk for any entity, that what is the risk of this person that wants to have the life insurance or the health insurance or such. So this is the business that the underwriters do. Underwriters are the ones that are assessing the risk, and that tells the risk to the company that okay, this person has more risk of dying, or this person has more risk of the health problems or such. So you should take more premiums from this person, or you should not accept you should not give the insurance to this particular person, because this particular person has this disease. Okay, so this is the basic idea, that the underwriters are the ones that are telling the risk. Based on this assessment, underwriters decide whether to accept, reject or modify the terms of the insurance policy, and they are the ones that are telling that to accept the insurance proposal, or to reject it, or to increase the risk, or to increase the premiums, or to decrease it. So LIC is the only life insurance company that is underwriting business outside of India. That means it is telling the risk of the people or the entities that want to take the insurance. There are the people or the entities, now they want to take the insurance. So there is some risk associated with this insurance that is being provided. So the risk is calculated by the underwriters, and to accept the insurance, or to provide the insurance to these entities, or not to provide the insurance to these entities, what is the risk associated, all of this is gauged by the underwriter. So that is the business that the underwriter do. Okay. Now coming to the business performance of general, health and specialized insurers. So basically the life insurance we have seen. Now coming to non-life insurance. Non-life insurance means health insurance, your motor insurance, fire insurance and such. So during 2022-23, the non-life insurance industry underwrote a total direct premium of 2.57 lakh crore in India, registering a growth of 16.4% from previous year. So the premium growth in the non-life insurance sector is by 16.4%. Okay. Among various segments under non-life insurance business, health insurance business is the largest segment. So here you can see that segment wise share of premium. So you can see that the health insurance is the highest category in the non-life insurance. So highest premium collection has been done in the non-life segment by the health segment. Okay. After this there is the motor segment, because third party insurance for your vehicle, for your car, you have to take the third party insurance. So motor vehicle insurance premiums are also very large. Okay, so they are second largest, we can say. So among the various segments under non-life insurance business, health insurance business is the largest segment with a contribution of 38%. Then after that there is the health insurance segment. After the health insurance segment there is the motor insurance segment, and then there is the fire, other and such. Okay. Now this is the brief idea, as well as the premium underwritten or the premium collected or the premium that was accepted within India by non-life insurers have increased from the previous year, and there is the increase of 16.4%, that you can see that the premium that was accepted, the premium that was collected or the premium that was underwritten, that was told by the underwriters, has increased from the previous year to this year. So that is by 16.4%. Okay. Now coming to the next, policies and measures to develop insurance market. Till now, any confusion anyone has, kindly tell me, then I will move forward. Any confusion anyone has? Any confusion anyone? No confusion? Okay. So now, policies and measures to develop the insurance market. All the, like, RBI is the regulator of the banking sector. Okay, there is the NABARD, that is the regulator or that is the supervisor of the agriculture segment. Then there is the IRDAI, that is the regulator of the insurance sector. So all the regulators, they are working for the development of their particular sector. Okay. So IRDAI is on a mission to revamp and reform the insurance sector in the country and increase the insurance penetration in the country. So the primary objective of these efforts to enhance availability, accessibility and affordability of the insurance for all the citizens and businesses. So you can understand that we want that all the citizens of the country and all the businesses of our country should be taking the insurance or should have the access and the affordability of the insurance. They should be able to afford the insurance. So IRDAI during 2022-23 has implemented following important regulatory measures, such as a single window NOC portal has been opened. This is the NOC portal that you can see of the IRDAI. This portal is to enable the applicants interested in registering as insurers. That means you want to become an insurer. You want to open your insurance company. Okay. So they can apply for the no objection certificate. They can apply for the NOC to incorporate a company with the name containing insurance. So general insurance company, life insurance company, NIACL. So all the insurance companies, they have the insurance in their name. Okay. So Star Health Insurance. So they have the insurance in their name. So if you want to become an insurance company, if you want to become an insurer, if you want to undertake the insurance operations or the insurance business, you have to take a NOC certificate or you have to take the no objection certificate to open your company as an insurance entity, and you will be allowed to use insurance in your company's name. So for that, you have to take this NOC certificate. For that, there is a portal that has been constructed or that has been established by the IRDAI. So entry of new players into the insurance sector has been made easy because now there is a single window NOC portal that has been opened. This was launched to facilitate the incorporation of an insurer by making the NOC available in a hassle-free and timely manner through a single portal. So the other steps have been taken. So quick launch of insurance products. Now if you want to launch a new product, let's say you are a you are working in a health segment, you want to open a new segment or you want to provide products of a new segment or such, or if you want to provide some tech-based product. So you will be allowed to do that in an easy manner. So there is a quick launch of insurance products that you can do. Insurers can now launch all health and general insurance products as well as majority of life insurance products without seeking prior approval from IRDAI, thereby reducing the time taken to launch a new product in the market. So simply, if you are in the health insurance market, in whichever segment you are conducting your business, you will be able to do the business in a hassle-free manner and you will be able to launch the new products in a hassle-free and the timely manner, because you do not have to take permissions for most of the different products. Next is ease of doing business. IRDAI has taken several actions to reduce the burden of compliance. So this was discussed that all the regulators, the RBI has released which portal, can you tell me which portal has been released by the Reserve Bank of India for the easy compliance with the approvals, with the regulations and such? So Reserve Bank of India has opened or has launched the Prava portal, right? Very good. So Prava portal has been launched by the Reserve Bank of India for the easy regulations and for the easy compliance with the approvals with the applications. Okay. Now IRDAI has taken several actions to lessen the burden of compliance also. In this direction, so far 70 returns have been rationalized and about 167 circulars have been repealed. while dispensing with the prior approval requirements in certain identified areas. So basically the idea is that the IRDAI is trying to make it easy for the companies to follow the compliance regulation, and for them the 167 circulars have been repealed, 70 returns have been rationalized. Okay. Next is addressing dynamic needs of the industry. So IRDAI has facilitated various measures as per evolving needs of the sector, such as tech-based add-ons. So technology-based add-ons are being provided. So there is a concept such as pay as you drive. So if you drive less, let's say in a year you have drove very less kilometers, you are not a very regular driver, or you are not driving your car regularly, but still you have to take the third party insurance, still you have to take the motor insurance. So now there is a concept that is pay as you drive. That means if you drive less, you will have to pay less premiums. Okay, if you have got into less accidents, or if you have not got into any accident, you will have to pay less premiums. So that is the add-ons that are provided. You have to buy the motor insurance, but if you have driven less, if you are driving less, that is you are driving your car less, so you will have to pay less premiums. Okay, because there are less chances of you getting into a accident. So this is the basic idea. So if you want to get, so there are the tech-based add-ons that are being provided by the different insurance companies that have been addressed, that have been allowed by the IRDAI. So addressing the dynamic or the evolving, the innovative need of the industry. So all the industries around the country are evolving, they are becoming dynamic, they are bringing the innovative solutions. Like if you see that in the banking industry, there are mobile applications that are being launched, there is the digital lending applications that are being launched so that you can take the loans easily. Similarly, in the insurance sector also, there is the development that is required, there is the technological involvement that is required for the different things. So IRDAI has facilitated various measures as per evolving needs of the sector, such as tech-based add-ons. General insurers have been permitted to introduce tech-enabled concepts for the motor insurance, such as you can see pay as you drive. If you are driving less, you will have to pay less premiums. Pay how you drive. So if you are getting into less accidents or something. Expansion in the scope of the cashless facility in health insurance, it has been said that you have to allow the cashless payments, like you have to allow the payments through the digital system. There should be direct payments that should be happening from the insurer to the hospital, so that the cashless payment should happen for the health insurance. If you are hospitalized, or if there is some hospitalization that is happening, so cashless payments should be happening. Innovative products in fire insurance, ease of living for senior citizens and such. So here you can see IRDAI permit insurers to introduce tech-enabled add-ons in motor insurance plans and in different plans. Okay. Now, projects which are currently work in progress. So there are different projects that are currently work in progress. So the concept of Trinity. So this is very important. It can come in your GA in the phase 1. It can come in your phase 2 also. Okay, such a question, or you can use this Trinity in your answer writing. So Trinity is the Bima Sugam, Bima Vahak, Bima Vistar. So this Trinity is being worked out towards reaching the last mile, leveraging technology, community-centric intermediaries and simplicity of the products to ensure universal coverage. So this is a Trinity that has been launched by the IRDAI to ensure or to promote the universal coverage of the insurance segment. So there is Bima Sugam, there is Bima Vahak, there is Bima Vistar. So starting with Bima Sugam. Bima Sugam, this is an online platform where customers can choose a suitable scheme from multiple options given by various companies. So this is a Amazon kind of thing, that at one place you are getting all the products. You can access all the products, you can do the payments also, you can fill in the premiums also. So this is a one portal, that is Bima Sugam, through which you can access the health insurance, life insurance, you want to take motor insurance, because if you consider your own parents, they want a health insurance, they are taking life insurance also for the protection of their family, they are taking motor insurance also if they drive. They might be taking fire insurance or something also. Okay, so people are taking multiple insurance they can get at one place through this Bima Sugam. So this is an online platform where customers can choose a suitable scheme from multiple options given by various companies. all insurance requirements, including those for life, health, motor, general insurance that you want to take, will be met by Bima Sugam. The hallmark of this platform is its streamlined, paperless claim settlement process, as well as leveraging policy numbers for both health coverage and death claims. So simply, Bima Sugam is a unique platform expected to provide end-to-end solution for your purchase of any of the insurance product, for service, and for the settlement of the policies also, thereby democratizing and universalizing the insurance. Very good words have been used that you can use in your answer writing. Again and again I am telling you, because this is important from phase 2 perspective also. So simply put, Bima Sugam is a one-stop platform. It is a one-stop solution where Indians can explore, compare, buy insurance policies with ease, and they can also claim their settlements. Now coming to the next point, that is your Bima Vahak. So to establish a dedicated distribution channel that is focused on enhancing insurance inclusion. So Bima Vahak is simply for promoting the insurance inclusion in the rural areas, in the backward areas, and using women agents for the promotion of your insurance. Okay, so Bima Vahak is aimed to be a tech-led, women-centric distribution force, so that women can be employed in the insurance segment as agents, so that women are getting employment, and it is a women-led distribution scheme. Okay, so Bima Vahak is a dedicated distribution channel that is focused on enhancing the insurance inclusion to reach to the far off areas, to reach to the rural areas, to promote the insurance penetration in the country and availability of insurance in every nook and corner of the country, creating awareness in every gram panchayat. Okay, identify and develop resources locally who understand and appreciate the local needs within every gram panchayat and village, especially encouraging onboarding the women who can gain trust of the locals as Bima Vahaks for distribution and servicing of the insurance products. So you are like, the Bima Vahak is the main idea behind the Bima Vahak. The idea is that we are going to promote the insurance inclusion. We want the far off areas to also get the insurance, because you can understand that even in the rural areas there are the family heads that are dying. So the whole family, the family of the children and the mother, they are getting without, they have to survive without any regular income. So if they get the health insurance, if they get the life insurance, their life will be much easier. Okay, right? So if any disease they have to encounter, so it will be much easier for them to get access to the health services. So to reach to the far off areas, this is the Bima Vahak, that is a women-led distribution channel to onboard the women to promote the insurance inclusion. Next is Bima Vistar. Bima Vistar launched with an aim to enhance insurance penetration in country in the rural areas especially. Bima Vistar is all-in-one insurance plan. Gives policy holders the coverage for life insurance, the health insurance, the personal accident and property risk. Bima Vistar is especially for the rural areas and for the poor people, if they are not able to, they do not have the money to pay the premiums, the farmers, the livestock breeders, or the rural area. Like in the rural area there are many of the poor people. Even in the urban areas there are many of the poor people that do not have the money to pay the premiums for life insurance, health insurance, motor insurance and such and such. So Bima Vistar is launched with an aim to enhance the insurance penetration. This is a one product that is being provided, that is catering to the needs of the life insurance, health insurance and such. Okay, so Bima Vistar is a multi-line product, such as life, health, property and belongings. All of these different products are submerged in one product with parametric insurance solutions. Okay, so Bima Vistar will be cheaper. Of course it will be providing less insurance coverage also, but at least something will be provided to the people, right? So this is the idea. So I hope it is clear. So this Bima Vistar is all-in-one insurance product. This is designed for people living in rural areas of the country specifically. Okay, so Bima Sugam, Bima Vahak, Bima Vistar. So they all are working for the for the insurance inclusion. Bima Sugam is a portal through which you can access all the products that you want to get. Bima Vahak is for the insurance inclusion, for insurance awareness to be spread, and this is a women-led distribution system that is being aimed. Bima Vistar is a all-in-one product for the poor people, for the rural people. to get access to different insurance products through one product. Okay. Now coming to the IRDAI's project which are currently working progress. So now coming to Bima Manthan. Bima Manthan. Manthan means where the people come and they think about the things. Okay. So as part of collaborative and consultative approach, periodical meetings happen, that is Bima Manthan. They are conducted with the CEO of the insurance and reinsurance companies. So the CEO of the top companies, the CEO of the insurance companies, they come together to discuss about the problems that they are facing in the insurance segment and to come out with the solutions and to discuss further for the betterment of the insurance sector. So important matters relating to the insurance sector are deliberated, are discussed in this meeting. So the recent Bima Manthan meeting happened on 26th April 2024. Okay, so this was the Bima Manthan interaction with the Indian insurance industry. So this was conducted by IRDAI. So Bima Manthan is a collaborative consultative approach. Next is single intermediary portal that has been launched by the IRDAI. So a single intermediary portal for various regulatory compliance along with registration is being developed. It is envisaged that the portal would bring down the turnaround time of various activities and will facilitate ease of doing business. So this is a single intermediary portal for all the intermediaries to decrease the turnaround time and to make the process more faster for the intermediaries. Now the next one is that we have discussed about Bima Sugam. If you want to know more about it, you can read it. Next is IRDAI Hackathon. So how many of you remember the Harbinger Hackathon of Reserve Bank of India? Anyone has any idea about the Harbinger Hackathon of RBI? Yes. So hackathon, like in the hackathon, it is a marathon kind of thing where the competition happens. Okay. Where the innovative solutions have to be developed. So it is a competition where the innovative solutions have to be developed on a problem statement. So the IRDAI has also conducted the hackathon. So there was the first hackathon that was conducted by the IRDAI, that was conducted in 2022, that was Bima Manthan 2022. Okay, so Insurance Regulatory and Development Authority of India, that is IRDAI, is organizing its first hackathon, that is Bima Manthan 2022, where the IRDAI is giving the problem statements, and these are the problem statements, and the IRDAI is asking for the innovative solutions on these problem statements. So what are the problem statements of the Bima Manthan 2022? So that is automated death claim settlement using technology. So automatically the death claim settlement should happen using technology. Tech-based solution to decrease the mis-selling of insurance products, as well as tech-enabled solution to identify the uninsured motor vehicles, because the third-party motor insurance is compulsory and that should be happening to insure the other party. So the tech-enabled solution to identify the uninsured motor vehicles and ensure that issuance of mandatory motor third-party insurance is happening. Okay, so for these are the problem statements that are identified by the IRDAI, and the IRDAI is demanding or is taking the innovative solutions on that. Technology-based distribution of insurance products, including micro insurance, that is small insurance for the difficult terrains and less penetrable areas. So micro insurance, small insurance, or the easier insurance that can be provided, the cheaper insurance that can be provided. Fraud mitigation or prevention in motor insurance by using technology and such. So these are the 5 problem statements that have been provided. Okay, that the solutions were invited in the areas of these 5 problem statements. So invited participants, they have to identify and develop solutions that have the potential to make the insurance available to every individual in a seamless and swift manner, and these are the problem statements on which development of solution should happen. Next one is that in order to provide a channel to receive grievances against insurer companies or against the insurers, IRDAI has set up IRDAI Grievance Call Center. So there is a IRDAI Grievance Call Center that has been established by the IRDAI, as well as there is also Bima Bharosa Portal. So Bima Bharosa Portal has been launched by the IRDAI, through which you can launch your complaints, you can register your complaints, you can demand your unclaimed amount. So this is a Bima Bharosa portal that is taking your grievances, that is also storing the grievances. Okay, so Bima Bharosa portal, this is an online system for grievance management that is not only a gateway for receiving the grievances, for registering and tracking the grievances online, but this is also acting as a repository for the grievances, that which grievances are being received by the people. That means people are having problem in which of the segment the most. Okay, so this is the basic idea, that there is Bima Bharosa portal. So there is Bima Sugam, Bima Vahak, Bima Vistar. So these are the three products, or these are the three Trinity that we can say. Then there is Bima Banthan, then there is Bima Bharosa. All of these are very good pointers that you can remember, and the question can directly come on this also. Now coming to the next point, that is regulatory sandbox. Like the Reserve Bank of India, it has a regulatory sandbox. Similarly, IRDAI also has a regulatory sandbox. So what is the meaning of regulatory sandbox? Regulatory sandbox is a it is a live testing environment. Regulatory sandbox is a live testing environment that is provided by the regulator itself, so that the testing of the innovative products can happen. So the innovative products can be developed in the regulated environment, and the innovative products can be tested. So Reserve Bank of India provides the regulatory sandbox for live testing of the innovative products for the banking sector, for the NBFC sector and such. IRDAI is providing the regulatory sandbox for the live testing of the innovative products and the innovative solutions in the regulated environment for the insurance products. That innovative insurance products should be developed in this live testing environment. Now, what is the development that has happened? What are the changes that have been seen? Yes, so that is, certain amendments were also carried out in the regulatory sandbox regulation to allow the insurers or the intermediaries, that is the agents, to do their experimentation, to do their live testing on an ongoing basis. Before, what was happening, that there was theme-wise cohorts, or there were the theme-wise solutions that were being asked. Okay, so like RBI also releases, RBI also invites the application for the regulatory sandbox for the live testing of your innovative products or innovative ideas on the cohort basis, on the theme-wise basis, and on the basis of the time-wise manner. Okay, so now the IRDAI has said that instead of having the cohort-based system, we are going to have a continuous process. Okay, so on an ongoing basis, the experimentation should continue. So by increasing the experimentation period from 6 months to up to 36 months, so now 36 months of the time period will be given for the testing for your innovative product to be developed, and moving from the existing batch wise. So currently there is a batch wise system that is adopted by the IRDAI, as well as RBI also has the cohort based system, that on the batches the regulatory sandbox is opened. That right now it is for prevention and mitigation of frauds, then it will be for digital payments and such. But IRDAI has said that we are moving away from the batch wise system and we are moving towards the continuous system, that continuously you can send your applications continuously. There can be more and more innovators that can be selected for their testing in the regulatory sandbox. Okay, so the IRDAI is moving from the existing batch wise system, the cohort approach, where the clearances or approvals, to clearances or approvals on a continuous batches or continuous basis. So the IRDAI is moving away from the cohort approach to the continuous basis. Okay. Yes, this is the latest IRDAI report that was released in December 2023. So if the last IRDAI report was released in December 2023, so you can understand that the recent one or the next one will be released in December 2024. By then your exam will be finished, right? So this is the recent one, December 2023 one, that you have to do, or that we can teach. Okay. Now coming to the next one, so I hope regulatory sandbox is the idea is clear that the time period has increased from 6 months to 36 months, and now the applications or the clearances or approvals will happen on the continuous basis rather than the batch wise basis. Reforms and regulatory initiatives in Indian insurance sector. So Vision 2047 of the IRDAI announced in 2022, this is towards the insurance for all. So it is the vision of the IRDAI that we want to achieve the insurance for all by 2047, okay. So this has so insurance for all has continued to be worked forward during the financial year 2022-23. So here the idea is that there should be availability, accessibility, affordability of the insurance for all, that is insurance should be achieved or taken by all the citizens and businesses. So for that there are three fronts that have been identified. Regulatory reforms are required to rationalize the regulatory framework for ease of doing business, for reducing the compliances for the intermediaries, for the companies to follow the regulatory compliances, but in an easier manner, so that they can also promote the insurance segment in the country, so that new insurance companies can also enter the market. So regulatory compliances should be there, but regulatory compliances have to be rationalized, have to be decreased, so that the insurance companies can follow the regulatory compliance in an easier manner. Next is initiated the state insurance plan that we are going to understand in the coming slide. So there is a state insurance plan that has been created for insurance for all for Vision 2047. To achieve the Vision 2047, to achieve the insurance for all vision, there is the state insurance plan that has been created. That is a very thorough plan that we are going to discuss. Technology initiative towards digitization of the insurance industry. So this is the idea. IRDAI stakeholder engagement uniquely formalized in theme-based Bima Manthan. So there is also theme-based Bima Manthan that is happening. So the meetings of the stakeholders or meeting of the insurance company CEOs, this is happening under the Bima Manthan in the theme-wise manner. So now coming to the theme-based Bima Manthan. So recently, the recent Bima Manthan has happened. The recent Bima meeting, we can say, that has happened, where the stakeholders came together to meet in the IRDAI's Bima Manthan that recently happened. This was the 6th IRDAI Bima Manthan that happened. In this, there was the state insurance plan that was discussed, that we are going to discuss in the coming slide. So as well as Bima Trinity risk management procedures, all of this was discussed in the Bima Manthan that happened in April 2024. Okay, so this is the idea. So I hope you understand that the Vision 2024 of the IRDAI announced in 2022 work towards the insurance for all, okay, has continued to be worked forward during the financial year 2022-23, and there are three fronts that are identified, that the regulatory framework has to be rationalized, the reducing the compliance burden, initiating the state insurance plan, technology initiatives should be taken towards digitization of the insurance industry, as well as IRDAI stakeholder engagement is required, the insurance companies engagement is required, uniquely formalized the theme-based Bima Manthan, where the stakeholders of the insurance sector, where the CEOs of the life insurance companies and the non-life insurance companies, they will meet for the discussion on different plans. Okay, now what is the state insurance plan? Because we have discussed about the Bima Trinity and such. So what is the state insurance plan? So state insurance plan, this is this is having the objective towards insurance for all by 2047. Sorry, the insurance for all by 2047. This is the aim. This is the aim of the IRDAI. So the plan envisages implementation of various strategies and activities towards increase in insurance penetration across various parts of the countries, with the help or close coordination with the state government machinery. So have you heard about lead bank scheme? Have you heard about this scheme? Lead bank scheme. Anyone has heard about lead bank scheme? So for the lead bank scheme, what happens, that a lead bank or a bank is selected for different union territories, for different states or for different districts. Okay, Yes, so lead bank scheme. So lead banks or a particular bank is chosen that has the responsibility to develop the banking system in that particular district or in that particular area. Okay, so that is a lead bank scheme. Such kind of scheme has been taken by the IRDAI also. That is the state insurance plan talks about the lead insurers. So there will be lead insurers that will be selected for particular states or for particular districts that we have to discuss. Okay, so the state insurance plan is a collaborative and consultative effort from the entire insurance industry to deepen the insurance penetration. Each state or union territory has been assigned to various insurers and are designed as lead insurers. So like there is a lead bank scheme for the different union territories, for the different states, they will have a lead bank, or they will have more than one lead banks that will have the responsibility to deepen the banking system in that particular state or in that particular union territory. Similarly, there is lead insurers that are being identified. There will be multiple insurance companies that will be having the responsibility to develop the insurance sector in a particular state or in a particular union territory. So they have to, the lead insurers will have the responsibility to deepen the penetration of the insurance sector in a particular state or union territory. So for the state and union territory, for each state and union territory, they have been assigned the various insurers that are the lead insurers. The insurers are expected to constitute state level insurers committee and the district level insurer committee. This will be constituted by the lead insurers, involving the state administration and other insurers. So lead insurer have the responsibility to collect the other people and to do this kind of development. The state specific strategies to be developed and enabled for each state, because in our country different states have different geography, they have different traditions, they have different systems working. Okay, so different strategies have to be adopted for different states. So this is a state insurance plan that you can read. Okay. Okay, so now coming to the last few slides of the insurance, the IRDAI report. So this is the last few slides. So just we are towards the end of the session. So first of all, solvency margin. What is solvency margin? We have discussed the solvency margin in the RBI financial stability report. So in the financial stability report that was released in June 2024, we have discussed about the solvency ratio. Okay, so let's see the RBI segment first. So in the RBI financial stability report of June 2024, we have discussed about the solvency ratio of the insurance companies. So the solvency ratio of an insurance company assess the ability of the insurer to meet its obligation. So in the solvency margin or in the solvency ratio, we are trying to see that what is the capability or what are the assets of the insurance companies against their liabilities or against the claims that they can face. If they can face the claims of 100 rupees, the assets they should be having should be 150. So this is the liabilities or claims that they can have or they can face. Okay, so the solvency ratio of an insurance company, it assesses the ability of the insurer, that is the insurance company, to meet its obligation towards policy holders by reflecting the level of assets it have against the liabilities it has. Okay, so over and above the liabilities or the claims that it can have, it have to maintain the assets. So if it is going to have the claims of 100 rupees, or it is like there are the assumption or there is the calculation that the claims can be of 100 rupees, so it has to maintain the assets of 150%, that is 150 rupees, 150% we can say. Okay, so this is the idea. The minimum solvency ratio requirement set by the IRDAI for all the insurance companies in India is 150%. That means over and above your claims that you can face, over and above your liabilities, you have to maintain the assets of 150%. Your solvency margin is 150%. The higher the solvency ratio, the better will be the ability of the insurer to meet its liabilities, as insurance liabilities involve an assessment of future contingent events and such. Okay, so now this is the idea that the solvency ratio is 1.5, solvency margin is 150%, because ratio is not multiplying with 100, that is the basic mathematics. So solvency ratio is 1.5, solvency margin is 150%. So So solvency margin is the extra capital or the assets that the companies must hold over and above the claim amounts they are likely to incur. That is the basic idea. Now the Insurance Act of 1938, as amended from time to time, specifies a level of solvency margin known as control level of solvency. Solvency margin maintains the solvency of a company. That you have 150% of the solvency margin, that means your company has more capacity to remain solvent, to not get under the distressful situations. Okay, so which currently solvency margin or the control level of solvency is currently 150%. This is of the required solvency margin. Solvency position of life insurers. So for life insurers, that is the life insurance companies, at the end of March 2023, all the life insurance companies, they complied with the stipulated solvency ratio of 1.5. That is, they have the solvency margin of 150%. So here you can see that all the life insurance sector companies, they had the solvency margin of 150%. So they had the solvency margin of 150%. So the life insurance sector has the total solvency margin of 150%. Okay. Now insurance company wise solvency ratio was good, that all the companies, all the life insurance companies, they were maintaining the solvency ratio of 1.5. Now coming to non-life insurers, now here you will see the problem. Here there is a problem that happened. So as at 31st March 2023, all 25 private sector general insurers, including the standalone health insurers, they have complied with the stipulated solvency ratio of 1.5. What about the public sector general insurers? So public, there are public sector general insurers, they have not followed the solvency margin. They are not following the solvency ratio, and the government is saying that let them work. Okay, and the government is saying that we are going to provide more capital to this public sector general insurance companies. But there are general insurance companies that you have to understand that the public sector general insurance companies, they have not followed the solvency margin during this time period. Okay, so this is the basic idea. So the general insurance companies, there was only one public sector general insurance company that has actually followed the solvency margin. I think it was NIACL. So do read about it. Okay, you have to find it and you have to tell me in the comment section that which public sector. So there are only 4 public sector general insurance companies, out of which 3 general insurance companies have not followed the solvency margin. Okay, so out of the 4 general insurance companies, public sector companies, out of the 4 public sector general insurance companies, only one has followed the solvency margin, it is NIACL, and the other 3, the Orient, the United, they have not followed the solvency margin, the solvency ratio, the solvency margin. Okay, so solvency margin, let's say that you have the liability or the claim that can happen is of 100 rupees. The claims that you can face, you are assuming, or there is the calculation that has happened that you can have the claims of 100 rupees. Now, what if there are higher claims that can also happen, lower claims that can also happen, but it has been said by the IRDAI that you have to maintain the asset of 150 against the claims of 100 rupees. That means solvency margin should be 150%. So that if any claims are coming, you have some extra assets to even handle the higher claims. So that should be there. So solvency margin is going to maintain the solvency of the company, so that if higher claims are happening, you are able to handle the higher claims also. You are able to handle all the claims that come to your company. So that is the solvency margin. Okay. So now public sector, there are 3 public sector general insurance companies that are not following the solvency margin in the previous financial year. Okay. So overall, but if we see that overall, so here you can see public sector in the non-life insurance sector or in the general insurance sector, we can see that in 2022-23, so for this financial year, if we see the data for March 2023, The public sector undertaking insurers, that is the insurance companies, the general insurance companies of the public sector, they are following very less solvency margin as compared to 150 that is required. Okay, while the private insurers, they are maintaining good solvency ratio. Okay, so out of the 4 general insurance companies, 3 are not at all following the solvency margin, only 1 is following it. Okay, so this is the idea. Any confusion anyone has in this? So the consolidated, if we see the consolidated industry wise, so if we see as per the RBI, if we see the consolidated industry wise for the insurance, life insurance, for the non-life insurance, if you see the consolidated solvency ratio of the 2022-23 for the 2022-23, so you can understand that the solvency margin was above 150% or was above 150. For the life insurance, the public sector and private sector, they both are following the solvency margin, but in the general insurance or non-life insurance sector, the public sector is not following the solvency margin, so that is problematic here. Okay, 150 is minimum, it is minimum 150 is minimum. The higher that you maintain, it is written here na, the higher the solvency ratio, the better will be the ability to handle the distressful situation or to handle the liabilities, because this is the assumed claims. 100 are the assumed claims. What if the claims are more? So to handle that, the more the solvency margin you have, the better. Okay, so even you can have, like, many of the companies are keeping like capital adequacy ratio of the banks. The banks have to maintain the minimum capital adequacy ratio of how much percentage? 11.5, but they are maintaining 16% of capital adequacy. Similarly, the insurance companies have to maintain the minimum solvency ratio or minimum solvency margin of 150%, but they can even have more than that. I read the newspapers that what IRDAI did for the 3 public sector general insurance companies that were not following the rules and regulations, but the articles were usually about the government, that the government has said that we are going to provide more capital to these companies. And the government has also said that the 3 companies have never they have never said no to any claim, they have never got into a problematic situation. So that was the articles all about. Okay, so many of the students were talking about the MCQs, that I will take a separate session for the MCQs. No, that is not required because the IRDAI annual report, you have to read the whole of the annual report, because descriptive, the phase 2 is completely descriptive, and it is a very important annual report that is providing you many important data points. So this annual report you have to read, and from this mostly the descriptive questions you have to practice, that will be taken by Jaskaran sir in his sessions. Okay, so descriptive questions you can practice with Jaskaran sir. I am going to provide you a few MCQs here only, so that you have the idea that what kind of questions can come. Okay, so from the IRDAI annual report, in the phase 1 in the GA section, you can see some basic questions. Okay, so first of all, in 2022 India was ranked what? So this is a homework question that you can answer. Next is, as per Swiss Re Sigma report, the United States is the largest one. After that there is China. After that, which is the 3rd largest insurance market? Okay, so this you have to answer. Next one is that which is the unique platform expected to provide end-to-end solution for purchase, service, settlement and such. So you have to answer this question. So these are the 3 questions that you have to answer. Okay, now there is one more thing that I have to tell you, that in the, if you are going through the IRDAI, annual report, there is the global economy data that is given, that is the growth data that is given, the GVA, GDP growth data that is given. Now as you know that this GVA or GDP data is the previous data that was released till December 2023. So that data you do not have to remember. Okay, you have to remember the GVA, GDP data, the global growth data, or the country level, domestic level growth data, that you have to remember the recent one. for the IRDI. For the IRDI, you have to remember the recent one only. This is the older one. So like for the global growth, for the GDP, for the GVA, the recent data you have to remember. For the insurance penetration, for the insurance density, for the insurance sector, you have to follow the annual report because the recent data is not as much available. And when you are writing the answers, in the descriptive section, you can mention that as per the annual report of IRDI 2022-23, this is the data that India is the 10th largest insurance market in 2022. Okay, so insurance sector data you have to follow from the IRDI annual report. But the GDP data, the overall economy data, the NSO has released the recent data, the MPC, the IMF, for the global growth, the IMF is releasing World Economic Outlook report and such. So for the global growth, do not follow this, okay? That is the idea. Any confusion, anyone? So these are the 3 questions that you have to do. I hope you will be easily able to do this. The descriptive answer writing practice will be done by Jaskaran sir in his Perspective 360 sessions. So I have provided you the basic fodder material. So when he asks a question, I hope you will be answered a few. Any confusion anyone has? So IRDI का exam कब होगा, phase 1 कब होगा? So I do not have the definite date, so I cannot say anything, but be prepared. Be prepared and think that IFSC phase 1 is going to happen on first week of October. So are you prepared for that? Just think that it is going to happen the soonest possible date. So be prepared according to that. Okay? Be prepared according to the idea that the IRDI phase 1 can happen at the soonest possible time. Okay, so be prepared according to that. Now, let me show you. If you go to Google, if you go to edutap.co.in, you can go to EduTap's website. So you have to go to edutap.co.in. You can go to EduTap's website, and if you want to see the blogs, if you want to read, if you want to know more about the IRDI, you can read the blogs. Okay, so the component wise or exam wise information is provided that you can see. If you want to see for the IRDI, the information is provided for different examinations. Okay, and if you want to get the courses also, if you want to get the courses of IRDI, you want to get the phase 1 course or phase 2 course, that is also provided here. You want to get the IRDI Grade A courses. So these are the courses that you can access, and this is it from my side. And if you want to get any help from the team, you can comment down below, you can write to the team. Okay, we are always there to help you. So thank you very much for attending the session, and this is it from my side. I hope you enjoyed the session. Do give me the right answer of the homework questions. Okay, so this is it from my side. Thank you very much for attending the session. Most welcome Sarish, most welcome Amit. So thank you everyone.